Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Stocks jump in Asia as investors get back on the AI bandwagon, but Nvidia slips after its earnings beat fails to meet lofty expectations. Countdown to liftoff. SpaceX files for what's set to be the biggest IPO in history, with a super voting share plan to keep Elon Musk firmly in control. Plus, Treasuries rebound as President Trump says the US is in the final stages with Iran. A very good morning, 6 a.m. here in London, and checking in on these markets. It is the morning after Nvidia, a beat but not a blowout from the world's most valuable company. But the fact that the CEO, Jensen Huang, has highlighted physical AI as the, quote, second category, poised only to grow, is boosting Asian tech stocks this morning. Korea leading the gains. You're looking at the Kospi up some 8% this morning, even if futures on both sides of the Atlantic are pretty flat. A sense of caution prevailing over the latest in the Middle East. Now, that takes me to the cross-asset picture. We had seen oil dropping yesterday on optimism that the US and Iran would reach an agreement. It's rebounded since, up 0.6% on Brent at 105.61 the barrel. Traders taking with a pinch of salt President Trump's comments that he's in final stages with Tehran. So Treasuries therefore steady, the 10-year at 4.58 and the dollar a touch higher. Now, in terms of the risk events on the docket for today, at the top of the hour we'll get the latest EasyJet earnings, this off the back of their profit warning last month. Then at 8.15 we'll have global flash PMIs, a course of them, and at 10:30 a.m. it's the EU Commission's spring forecast, and then 12 p.m. London time, Walmart earnings, so giving us a read on the health of the US consumer. Let's set you up for the day ahead. We begin with stocks in Asia jumping as investors pile back into the AI trade. Let's go straight to Anthony Stevens in Hong Kong with an update. Anthony, what are you seeing?
We are having an absolutely fabulous day in Asian tech today, right? We see Korea's up 8%, but Japan and Taiwan are up 3% as well. And under the hood, the gains are even greater. There's so much focus on the look-forward statements of Jensen Huang's analyst speech during the Nvidia conference, right? He's talking about physical AI, robots, and CPU demand, all of which are very heavily represented in the Asian indexes. On top of that, we got extra good news out of OpenAI and SpaceX on their upcoming IPOs. That's seeing SoftBank up nearly 20%. This combines with nearly 20% moves in the robotics names in Korea and nearly limit up moves in the CPU names in Taiwan. So across the tech ecosystem in Asia, you're getting a vindication of long-term local buying that is finally playing out today in big size, right? And this has kind of dissipated the macroeconomic concern around oil, which anyway came back a little bit yesterday. So the cross-asset picture is supportive, but the deep tech analytical picture on tech has really strengthened today, and you're starting to see these outsized gains.
All right, Anthony, I'll let you cartwheel off the set. Enjoy those equity gains this morning. Anthony Stevens out of Hong Kong. Well, as Anthony mentioned, it comes back to the Nvidia earnings partly, but their shares lower after hours, despite the earnings beat in the first quarter. The chipmaker reporting a surge in data center revenue, a boosted dividend, and guiding that sales will be of around $91 billion in the second quarter. Now, that forecast was ahead of consensus, but fell short of some analysts' projections. CEO Jensen Huang saying that he remains optimistic on demand.
This was an extraordinary quarter. Demand has gone parabolic. The reason is simple. Agentic AI has arrived. AI can now do productive and valuable work. Tokens are now profitable, so model makers are in a race to produce more. In the AI era, compute capacity is revenue and profits. NVIDIA is the platform of this era. Of all the platforms in the world, NVIDIA Compute supports the richest diversity of demand.
Let's get analysis now. We can speak to Neil Campling, Bloomberg senior strategist. So, Neil, you can play the ref here. What should we take away from this NVIDIA report?
On the face of it, 85% growth of the top line is quite stunning. It's actually 15 consecutive quarters where the company has actually come in and beaten expectations on the top line and beaten the actual guidance expectations. But as you've mentioned already, there were great expectations in terms of how people were thinking about the result. You're seeing the proliferation of other companies benefiting from the ecosystem for sure. And Nvidia, to a degree, the muted stock price reaction, I think, reflects the fact of positioning. There's a very narrow market in terms of US and US tech. And Nvidia is a big piece of the indexes. So it's difficult to see incremental new buying, maybe for Nvidia, but you see it in other stocks, as you've already seen in Asia this morning.
Yeah.
It's quite stunning.
So talk us through how Nvidia is responding to that growth in competition that we've seen in the chip sector.
I think it's interesting that there is some competition in terms of some of the other chipsets that are out there in the hyperscaler market. So we see Jensen talking about agentic AI. They talked about on the call last night that OpenAI and Anthropic are growing at such a rate in a month what took the SaaS companies up to a decade to grow to, which is quite phenomenal. Then he's talking about the potential for physical AI, and he even dropped a message on the call to say there's $100 trillion of industry about to be impacted by AI. So the moat, the opportunity set that's out there is simply quite stunning. And he talks about AI infrastructure spend being as much as $3 to $4 trillion a year by the end of the decade. So whilst hyperscalers may have alternative solutions now, we are looking at a bigger set of opportunity. Physical AI, sovereign AI, hyperscalers, Anthropic, Bloomberg exclusive overnight on the growth of Anthropic, from no product to $10 billion of quarterly revenue in less than 3 years. Simply stunning. So there's no end to the AI growth set, that's for sure. And Nvidia sits at the heart of that.
It's going mainstream, AI to the mainstream. Bloomberg senior strategist Neil Campling, thank you very much for that analysis. We're staying with tech. SpaceX has filed publicly for what could be the world's biggest ever IPO. It's targeting a valuation of above $2 trillion. Now, the documents also reveal a net quarterly loss of more than $4 billion. So let's get more now with Bloomberg's Avril Hong. She joins us now. Avril, what are we learning from this SpaceX filing?
Yeah, this is a much anticipated filing, and from it, we're getting a glimpse of the finances of the world's most valuable private company. And yes, it's seeing its revenue climbing to $19 billion last year, $4.7 billion if you look at the first quarter of this year. But that's not enough to outpace what we're seeing in how much it is spending, both on compute infrastructure as well as launch infrastructure. You think about its Starship project, it's $15 billion in, and this is much more than initially projected. And we're also learning how Elon Musk and the amount of the shares that he owns, the type of shares he owns as well, would essentially give him a voting power of 85.1%. So this would mean that for public investors, they will find it practically impossible to influence governance. Also learning about how Goldman and Morgan Stanley are leading the way on this deal. And as Bloomberg sources told us previously and reported, we could see marketing as soon as about 2 weeks from now, following which we'll see more information on pricing and then that trading debut on the NASDAQ.
And what do we reckon? Do we think OpenAI is going to be next, Avril?
Well, it could be, because we heard this week how a judge dismissed Elon Musk's case against OpenAI as he sought to, get a bit of a trial when it was really about the initial gist of the efforts from OpenAI in being a company that was for public good, and it became for profit. But that case has been thrown out, and now we're seeing, I think, OpenAI going to be really, really eager to move ahead with its listing, its IPO. Sources telling Bloomberg that we could see a confidential filing as soon as Friday, or filing in a matter of weeks, and the goal is for it to go public in the last quarter of this year. Now, this is coming against the backdrop of an intense race with Anthropic, its rival, to go to the public markets and secure investors. There is intense competition on that front at a time when Anthropic, as sources are also telling Bloomberg, might see its first quarterly profit. And this is, of course, against the backdrop of this really popular AI agentic tools, which is helping its revenues along. So this is, really interesting how it's shaping up for AI companies and their rush to public markets.
OK, we'll be poised for those IPOs. For the meantime, though, Avril Hong, thank you very much for that. Well, turning back to the macro, minutes from the latest Fed meeting show that a majority of policymakers warned the central bank will probably need to consider raising rates if inflation stays above the 2% target. Let's go now to Ven Ram, cross-asset strategist at Bloomberg MLive. Ven, I wonder, are markets prepared for the Fed to hike rather than cut rates?
Morning, Lizzie. I don't think they're prepared in any manner, sense of the word, for the Fed to be raising rates. If you look at the pricing, Fed futures pricing, the markets are thinking maybe, you know what, there is a 50% chance of a rate hike by the end of the year. I don't think that captures the economic reality out there. Yes, Kevin Walsh is set to take over, and next month will be his first rate meeting. But we will see already the pressure on the dot plot and the summary of economic projections. The Fed thinks that the core PCE is going to be 2.7% this year. That we know that that's already out of date. That needs to go out of the window, and they will usher in new forecasts, higher forecasts. We already see consumer prices, headline consumer prices around 4%, producer prices past 5%. So the Fed needs to acknowledge that. And once they acknowledge that, I think that the market pricing will need to shift higher, and that will weigh on treasuries, front-end treasuries in particular. I've been saying for a long time that rate below 4% on the 2-year was unsustainable, and now we have done 410, and I think that we need to go towards 420, 425 in the current macroeconomic backdrop.
Ben, we've got to talk about gilts as well. It was really busy last week with the political uncertainty. It's busy this week with all of the UK economic data. Are they still a sell or are they a buy at these levels?
Well, I wouldn't touch the front end. I mean, I think the front end has got a bit of a discount, even assuming for how much the BOE is going to raise rates. But that's a different story. But if you look at the long end, Lizzie, I think there is a distinct opportunity to be buying into and scaling into the longer term maturities, because at 575, the 30-year discounts all the bad news that is out there, the political uncertainty, the news of the fiscal deficit, the threat to the fiscal deficit and all that. And I think that, they will stay on the back foot until, the mist clears on what happens with the election surrounding Burnham and whether he's indeed going to be able to replace Keir Starmer. And if so, what are his fiscal policies going to be? But I think that, at 575, as I was saying, the price tag is pretty compelling. And if you swap out the 30-year cash flows into either euros or the US dollar, you get a fantastic pickup of 30 to 40 basis points above comparable treasuries and bonds. So I think that there is really a case to go long duration in the UK.
OK, cheap at the long end. Ven, thanks for your take. That's Ven Ram, cross-asset strategist at Bloomberg MLive. We're still ahead on Daybreak Europe. EasyJet set to post second quarter earnings after a profit warning in March. But first, President Trump says that the US is in the final stages with Iran. So we'll get you the latest next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:15 a.m. here in London. Now to some of the top stories we're following for you around the world this morning. President Trump has downplayed the need for more pressure on Cuba after the US charged the country's former president, Raul Castro, with a murder in a case related to the 1996 downing of 2 civilian aircraft. Elsewhere, French lawmakers have confirmed Emmanuel Moulin as the next governor of the Bank of France. The appointment of President Macron's nominee was opposed by more than half of legislators on the 2 finance committees out of the French Parliament. But the opposition did not reach the 60% threshold required to block his nomination. And Bloomberg has learned that Germany's ruling coalition plans to take a 40% stake in tank maker KNDS ahead of its planned IPO this summer. We're told Berlin later aims to reduce the holding to 30% and wants the French state to follow a similar path. KNDS makes military equipment, including Leopard tanks. Now, back to the geopolitics. The US and Iran have traded threats of escalation, even as President Trump says that the US is in the final stages of the conflict.
Everything's gone. Their Navy's gone. Their Air Force is gone. Just about everything. The only question is, do we go and finish it up, or are they going to be signing a document? Let's see what happens.
Now, in a post on X, Iran's president says that forcing surrender through coercion is an illusion, while also calling for mutual respect. Tehran has also warned that it would retaliate beyond the Middle East if the US or Israel renew strikes. Let's get the latest now with Paul Wallace, Bloomberg's managing editor for MENA Economy and Government. Paul, good morning. What does President Trump mean by final stages? Are the two sides actually close to a deal, or should we take this as posturing?
Hi, Lizzie. It could be either one. This could be just more posturing from Donald Trump. He has given plenty of signals that he is desperate to sort of extricate himself and the US forces from this war, and all signs point to him really trying to avoid a return to hostilities, given the surge in energy prices globally and the impact that's had on the US and many other economies across the world. However, there is movement behind the scenes, chiefly via Pakistan, the main mediator, and Iran is now assessing the latest US proposal. We don't know the exact details, but it seems as if it's more or less in line with what the two sides have been talking about in recent weeks, i.e. some kind of short-term deal that will see the Strait of Hormuz reopened and the US lifting its naval blockade of Iranian ports, and then the two sides would agree to go into, let's say, longer negotiations about Iran's nuclear program. That's the rough outline. However, as I said, this has been spoken about in recent weeks. It's something that both sides, the sides haven't managed to bridge their gap. So we're just going to have to see whether this time the US is finally able to get Iran to agree to what it wants.
Well, yeah, even in the here and now, though, Paul, it looks like oil flows are picking up through the Strait. How much is the situation improving?
It's still, I think, baby steps. I mean, we had Iran yesterday claiming that almost 30 ships had passed through the Strait in the previous 24 hours and sort of implying that was the IRGC letting these ships through. It didn't give too much detail and didn't really offer evidence for that claim. 30 ships would be high by the standards of this war, but it would still be way lower than pre-war levels of about 130 ships a day. So even if there is a pickup, we're still nowhere near where, essentially the global economy needs us to be in.
Okay, Paul Wallace, our managing editor for MENA Economy and Government. Good to see you as always. Thank you very much. Well, coming up on the programme, Jamie Dimon weighs in on the bond market sell-off that's been shaking global markets. We'll bring you our exclusive conversation with the JPMorgan CEO next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The JPMorgan CEO, Jamie Dimon, says that investors may be underestimating the risks from rising debt as well as higher interest rates. In an exclusive interview with Bloomberg, he warned that rates could yet climb much further.
I think they could be much higher than they are today.
Oh, yeah?
And,
how much higher?
You say decades, but we've had like one of the greatest bull markets. Other than brief COVID, since the great financial crisis, we've had a huge bull market, huge lower rates for the most part for a long period of time. But the world changes, like we may have gone from a savings glut to not enough savings. The AI investments, you talk about in America alone, 450 billion last year, 750 this year, $1 trillion next year, global deficits at all-time highs, and they are huge. So the governments, including ours, has to borrow huge sums of money, more next year than this year. And so people who own bonds, they tend to look at these things, and both inflation and demands for capital can push up rates.
The thing is, it's not just an inflation story right now. It's also, I guess, a credibility story, right? I mean, we have an environment where everybody's trying to pay debt, and governments around the world have so much debt at a higher level. I mean, at some point, it's going to hit.
Yeah. It is going to hit. Like U.S. government debt is 30 trillion. The average rate is 3.5%. So even today, they can't possibly refinance it at lower than that rate. They have another $2 trillion to do this year. But the thing is, we don't know when. We don't know when the world gets too scared about that, when inflation makes it where people don't want to own long-term duration securities, or when it's just a demand for capital. There have been examples in history where there's so much demand for capital, rates are going up, but it's for a good reason. People are making productive investments in the world. Government spending is often not that. Government spending is much more consumption related, which doesn't help future productivity. So, and all that spending too drives corporate profits. So people shouldn't be that surprised that corporate profits are doing quite well too, which helps obviously the stock market.
The question, I guess, if I could get you to look at the crystal ball, right? And what yield would that be spillover to the economy, to policy, to markets?
Yeah, so I'm very cautious about crystal balls because I don't think anyone has a crystal ball. We look at all potential possible outcomes, and you'd be surprised, from recessions with inflation, from recession with no inflation, from home prices down 40%, stock price down 40%. It's a wide range of outcome. I think when people think this is our forecast, that's what's going to happen, I think that's an intellectual error. I think you should be much more thinking about range of outcomes, possibilities, probabilities. And for us, we want to handle all of them so we can serve our clients. So I'm not that worried about our profits going down and the stock going. That doesn't worry me at all. I want to serve our clients and do a good job. And I do worry about the geopolitics for the future of mankind. That's a far more important issue in my mind. But just looking forward, I think it's my own view, and it's just different than other people, is that rates can easily go up more and credit spreads can go up more. If people
and everything's going to be okay, even with rates going up more?
No, at one point you can have a lot of people who have to refi at higher rates. So there's this general assumption that, I can refi all this debt at roughly the similar rate. Well, if credit spreads go up, people, companies, and governments will have to pay more. And so that can put stress in the system and easily could cause a recession type thing. Again, I'm not terrified of a recession other than it hurts people who get laid off. But I think as a scenario, that's a very possible scenario.
So that was the JPMorgan CEO Jamie Dimon speaking to Bloomberg's Haslinda Amin. Well, let's check in on these markets, shall we? As they stand this morning, a particular focus on the Kospi. The AI narrative back with a vengeance in Asia, thanks to Jensen Huang. Of course, we had the Nvidia earnings last night. What they're latching onto in particular is him highlighting that physical AI is the, quote, second category, poised only to grow. So that boosting Asian tech stocks this morning, Korea leading the gains, the likes of LG Electronics surging over 10% out of Seoul, but the Kospi also boosted by Samsung averting a strike. So you're looking at the Korean index up 8.3% there. Futures, though, in contrast on both sides of the Atlantic, treading water, as you can see, flat to the upside in Europe and to the downside in the US. This sense of caution prevailing over the latest in the Middle East. So if you look over to the cross-asset picture, you can see that there as well. Oil dropping yesterday on optimism that the US and Iran would reach an agreement, but rebounding this morning. We're up 0.8% on Brent. 105.83 is where we trade. This is kind of a mark of traders treating with some skepticism President Trump's comments that he's in the final stages with Tehran. So the 10-year Treasury yield steady at 4.59 and the Bloomberg Dollar Spot Index just a touch higher there, up 0.1%. Well, coming up on the programme, the CEO of Barclays becomes the latest top banking executive to give his take on the impact of artificial intelligence. We'll bring you more from our interview with Venkatakrishnan next. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Stocks jump in Asia as investors get back on the AI bandwagon, but Nvidia slips after its earnings beat fails to meet lofty expectations. Countdown to liftoff. SpaceX files for what's set to be the biggest IPO in history, with a super voting share plan to keep Elon Musk firmly in the driver's seat. Plus, Treasuries rebound as President Trump says the US is in the final stages with Iran. A very good morning. If you are just joining us, 6:30 a.m. here in London, welcome to the programme. This is the picture in markets this morning. The MSCI Asia Pacific Index up 2.5%. This on the morning after those Nvidia results. A beat but not a blowout from the world's most valuable company. But what's boosting Asian tech stocks this morning is the line that he says physical AI is going to be the second category, poised only to grow. So that boosting in particular the Kospi in Korea, that index up about 8% as things stand. Also boosted by Samsung averting a strike. But contrast all of this with the picture that we're seeing on both sides of the Atlantic. Euro Stoxx 50 futures now flat, and Wall Street set for modest, very modest losses at the moment. We're really hovering between the green and the red there. Now let's turn over to the cross-asset picture because it explains why. We are looking with a sense of caution at the latest in the Middle East. Oil dropping yesterday on hopes that the US and Iran would reach a deal. Rebounding this morning, up nearly 1% as things stand. Nearly 106 a barrel at the moment. But traders taking with a pinch of salt these comments from the president that he's in the final stages with Iran. Treasuries steady, therefore, at 4.59 on the 10-year, and the dollar a touch stronger on the Bloomberg Dollar Spot Index. Well, let's turn over to your front pages as well now. The Financial Times this morning leading with Nvidia's results, describing the response from investors as apathetic. Despite this boost to the chipmaker's dividend and an earnings beat, hard to impress this market, isn't it? But if we look over to the Wall Street Journal as well, they're focusing instead on SpaceX as the Elon Musk-owned company starts the countdown to its blockbuster IPO by releasing new financial details. We also, if we're turning to Spain's El País, look at the latest developments in Cuba. They've got a headline that describes the indictment of former President Raul Castro over the downing of planes belonging to the Brothers to the Rescue organisation. That, of course, in the late 1990s. But you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which terminal subscribers can find by going to D8YB Go. Well, let's stay in Europe, shall we? More data coming out today. This in the form of PMI numbers for France, Germany and the UK and the euro area, all due later on this morning. April's reading highlighted the dilemma that the energy shock has created for the European Central Bank as the economy weakens. Well, on the other hand, you have inflation climbing. Today's flash estimates will show whether that pressure is intensifying ahead of the central bank's next meeting. So let's go now to Zoe Schneeweiss. She leads our coverage of Western Europe economies. Zoe, good morning. What should we expect from today's data then?
So the number we always are looking for with PMIs is that 50 number. Anything below 50 is contraction, anything above is growth. Now, we've seen quite a split picture here with services and manufacturing. Services, since the outbreak of the Iran war, have quite clearly been in the contraction area, whereas manufacturing has surprisingly been above 50, so they've been growing. The reason for that, as far as we can see, is stockpiling. That companies are preparing because they think that sooner or later those supply chains will break down, that they will no longer be able to do things, so they're stockpiling. Overall, though, the services, as we know in Europe, has a bigger weight than manufacturing. So the overall numbers all are expected to be below 50, and that is just one of those that does show that stagflation picture. The other thing you mentioned, obviously, is inflation. PMIs are quite good at saying where inflation pressures and also how far are companies able to pass on B2B inflation to actual consumers. So all those will be things we'll be looking at.
OK, and we'll keep an eye on the euro and yields as those numbers come out throughout the morning, Zoe. But of course, we've also got to keep an eye on the European Commission's spring economic forecasts today. What should we watch for there?
That's right. Again, the European Commission only publishes twice a year, so the last forecasts are only from November. They have given some hints. The EU Economics Commissioner, Valdis Dombrovskis, has said that overall we are seeing, again, stagflationary environment, something Lagarde doesn't like using, but Dombrovskis doesn't have that issue. He is warned there. So overall, we're expecting some downgrades to growth forecasts and some upgrades to inflation forecasts. Again, all that puts the ECB in a bad situation.
We've also got Emmanuel Moulin's confirmation as Bank of France governor. Does that remove a sort of source of uncertainty for the ECB?
Yes, there was the worry, given Macron does not have majorities in parliament, there was a worry that his appointee as central bank governor wouldn't pass the parliamentary hurdle. One thing you do need to point out there is the parliament can only block if 3/5 of parliament votes against him, of these parliamentary committees. And while a majority did say no, the 3/5 majority to block him was not reached. Overall, Moulin is a slightly controversial figure here, just because he was one of Macron's top lieutenants. He was his top aide throughout his entire presidency. So installing a top aide like that at the central bank, and as we all know, the opposition only became free now because the central bank governor who still is there to the end of the month, François Hollande, because he left 1.5 years early. So that the right wing, the left wing, and even the socialists have all said this is really a stitch up, and we're not that impressed. Typically, this position would only be filled by the next president, and as we know, that will not be Macron.
So the economics becoming somewhat political. Zoe, thank you for the update. That's Bloomberg's Zoe Schneeweiss. We'll be back throughout the morning on those numbers. Well, let's turn to one of our top interviews now. The CEO of Barclays says that the UK should look for ways to reverse the economic effects of Brexit. Speaking at the Bloomberg Global Markets and Banking Summit here in London, CS Venkatakrishnan also gave his take on the impacts of AI and whether tech valuations are really justified at these levels.
Speaking from the point of view of a large corporate, the thing that is very difficult for us is actually to get the value out of AI that we think we can get, right? You've just got to change an organization completely. And there are 3 big aspects, each of which is really tough. One is adoption. Do you get the right tools available to people adopt them? How do they adopt them? Second is infrastructure, both in compute and in data and quality of data. And then the third thing is to find those high-value cases where you do something in an AI way, beginning to end, and throw away the old way of doing it, which is also hard. So corporate adoption is hard. And the question is, what is being built in to the equity market's perceptions of values of companies and this money they're spending based on their assumption of corporate adoption, right? Because if adoption is less than what people think, then valuations may be too high.
So what does that mean in terms of jobs? So we had Standard Chartered saying they will eliminate, corporate function roles by more than 15% by 2030. HSBC says it's looking to cut around 20,000 jobs. What does it mean for AI, for Barclays?
The answer is I don't know. There is, I'm being very serious about this because I think clearly there are tasks and activities which will see greater productivity, right? And where you can do something with fewer people than you can today. Equally, this opens capabilities on personalization of services, on actually investing in making existing things more efficient. And I can give you examples. We sample all the calls now for customer service agents. That is better than what we did, but it doesn't reduce the number of people. It makes us have better customer service agents. So these things are going to trade off. And I also think it's a really important thing for corporate leaders to look at the impact on our workforce, on reskilling people, and finding ways to actually use this technology, not just to make our companies better, but to make things better for our customers. This is hard stuff.
So Bill Winters yesterday talked about lower value human capital. He received a little bit of backlash. Was it a poor choice of words?
Well, I'll let Bill answer what he meant. But what I would say is that, human capital is a really important part of any large organization. And we must use technology, we must invest in technology, but we must also invest in our people. So that, as I said, reskill them, upskill them, get the most. And, if I can use a difference, some of these things will help with tasks. What people do are jobs. And a job is much more than a collection of tasks. And that's the thing we have to keep in mind, I think.
Have you seen a concrete business impact already, thanks to some of the AI that you've been implementing?
We're seeing creeping impact.
Okay.
We're seeing things getting on the margin a little more efficient in certain parts. Fundamental impact, I think is coming, but it's not. I don't see it yet.
The Barclays CEO, CS Venkatakrishnan, speaking to Bloomberg's Francine Lacroix, treading a little more carefully around those Standard Chartered comments. Well, coming up, we'll stay in the UK with a political crisis swirling around Downing Street. Chancellor Rachel Reeves is headed off to Parliament to deliver a summer savings package. What's that? We'll find out next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the UK Chancellor Rachel Reeves is heading off to Parliament this morning to set out her Great British Summer Savings Package aimed at easing cost of living pressures here in Britain. Bloomberg's James Woolcock joins me now with a preview. So, James, what is Reeves offering here, and how much is it, importantly, going to add to the fiscal squeeze on the government?
The philosophy here is high consumer visibility, limited fiscal responsibility, in that she wants to set out quite a small package in the scope of things. We haven't seen all the details yet, but there's, say, £100 million for sort of free bus fares for children, and then, crucially, there's going to be a big pressure on businesses to try and lower their costs. There's going to be nothing forced. And so in that, if you compare it to, say, Eat Out to Help Out, which is £800 million.
Under Rishi Sunak.
Under Rishi Sunak. COVID's furlough scheme, $70 billion. That's the kind of big kahuna here to compare to. Or this trusted energy support, $23 billion. We haven't yet seen any UK energy support from the government. That's supposed to come later in the autumn. But this is supposed to be things that consumers, voters, will see, but won't necessarily give bond markets any indigestion when looking at.
And do you think that this will cut through to voters? Because Starmer's really on the ropes here.
I mean, bluntly, no, but give it a few weeks, it will take time. I think the problem with this is take the buses. What's really interesting about the buses is Andy Burnham, the Great Mayor of Manchester, famously has a flat £2 cost on any bus ride. So that, in some ways, is a clear sort of push to that side of things. But so the fuel duty freeze, which is another part of these measures, the fuel duty has not gone up since the mid-2010s. So what is there for a consumer to theoretically notice? Similar to these voluntary business cuts, we don't know what they will be. And if they were to happen, it would be surely the businesses that get the credit, not the government. So it's quite a difficult pitch, but it's clear the Chancellor trying to say, in this era of cost of living inflation fixation, that she's doing something about it.
OK, so this is the Starmer-Reeves attempt to fend off Starmer's other rivals. We've also heard from those rivals themselves recently, more and more policy pitches coming from them, one of them including a wealth tax that works. What's that when it's at home, James?
I mean, this is fast. This is from the former Health Secretary, Wes Streeting. And what is so interesting about this, Lizzie, is we are not having a leadership election, but we are seeing pretty radical interventions from other Labour politicians. This would be putting capital gains pegged to income tax with similar brands around it, and it's all around pitching to the Labour leadership that Wes Streeting, who is seen as on the right of the party, is very left-wing. We saw a similar thing earlier this week where Andy Burnham, who's seen on the left of the party and is currently running to become an MP, talked about immigration reforms put in by this government being a good idea that he'd keep. This is all trying to win over the Labour Party for when this inevitable, it seems, leadership election does finally become a real thing. You do have to wonder, though, what the business-friendly policies of whatever that Labour government will be if and when either of those two or others become a Labour leader.
And if it'll ward off the reform vote in the meantime. James, thank you very much. That's Bloomberg's James Woolcock. Well, let's turn back to results, shall we? They keep coming. EasyJet reporting second quarter earnings today, about 1 month after posting a profit warning that drove the shares down the most since 2022. Now, the budget airline said that the war in Iran added £25 million in fuel costs in March, so investors are really going to be looking for further updates on that impact. Let's get some analysis now. We can bring in Conroy Gaynor, European travel and leisure analyst here at Bloomberg Intelligence. So talk us through what we should really be focused on in these results, because, we had Ryanair earlier in the week, and the impression is that Ryanair is a bit more resilient than EasyJet.
Yeah, I mean, look, the main thing I'll be looking at with EasyJet is actually the forward bookings. I mean, like you say, we had a Ryanair report. Their fares looked a bit soft compared to what we was expecting. EasyJet did actually give an update about a month ago, in mid-April, and again the bookings were starting to look soft. So what are we really looking for today is what has been the underlying trend. Has there been an improvement in the bookings, or are we still on this sort of negative trajectory? Because it is clear, other airlines and package holiday operators have alluded to this, that people are booking closer to departure. Be it they're worried about their budget, be it they're worried about the geopolitical environment. So is it a case of, those bookings are going to come through later on down the curve, or are people just simply holding back and not going to travel?
Yeah, maybe spending that money on something else.
Exactly.
So you say that there are lots of things different between EasyJet and Ryanair, but specifically on the fuel situation, how is that impacting EasyJet? So
EasyJet is about 70% hedged for the up until September, really, at pre-Iran war prices. So, they have reasonable cover, but Ryanair is 80% hedged all the way up until March 2027. EasyJet's hedge cover will start to roll off, as we go more into the winter months. So there, we don't know what's going to happen with jet fuel prices, right? But it really looks like some of that extra pain could come through if these shipping issues aren't resolved, and if the price of jet fuel doesn't come down in the future.
So basically, the end of the war is much more crucial for EasyJet than it necessarily is for Ryanair.
Yeah, I mean it's crucial for both of them, but I mean, up until Ryanair definitely has some more cover up until March. So it may have a bit of a tactical advantage there.
And what do you think is going to happen with capacity in Europe?
So we've been concerned for a little while now that there are pockets of overcapacity in Europe. I always say that when you compare this war to Russia-Ukraine, in Russia-Ukraine you basically had a constrained supply and pent-up demand, so airlines could pass through those extra fuel costs. This time we have a different situation. This time there is oversupply, I think, in parts of Europe. I think, looking at the Syrian data, it's still looking like this summer we could have about 5% seat growth. Is there the demand to absorb it this time round? Because all that pent-up demand that we had in prior years has now faded away.
OK. Conroy, thank you so much for that. That's Conroy Gaynor, Europe travel and leisure analyst here at Bloomberg Intelligence. Well, the EasyJet CEO, Kenton Jarvis, will be on the opening trade at 7:30 a.m. London time, getting a grilling from Anna, Guy and Tom after those results. Now let's take you to some other corporate news this morning. Bloomberg understands that Anthropic is on track for its first profitable quarter as demand for its AI software drives a sharp revenue surge. A source says that the Claude maker expects to post $10.9 billion in revenue for the second quarter, which is more than double the prior period. Anthropic's said to be considering an IPO as soon as October. And you can get a roundup of all things AI with Bloomberg's AI Today newsletter, a new one. Every day it breaks down AI's threats as well as the opportunities for businesses, finance and more. So be sure to subscribe to that at bloomberg.com/newsletters. Well, let us check in on these markets as we approach the European cash open. I'll start with the Kospi, though, because these are really outsized moves you're seeing in Korea, up more than 8% still. So holding on to these gains, it's partly because Samsung has averted a strike with its union, but it's also because you're seeing gains for the likes of LG Electronics. Some gains of about 10% this morning, and that off the back of the comments from the Nvidia CEO Jensen Huang, talking about the potential for physical AI and robotics. He calls it the new second category that's only going to grow. So that really boosting Asian stocks in general this morning. The MSCI Asia Pacific Index up 2.3%. In contrast to that negative picture that's emerging now on both sides of the Atlantic this morning. So Euro Stoxx 50 futures sinking deeper into the red, down 0.2% now, and S&P E-minis down 0.1%. Just looking over to the cross-asset picture briefly, it's partly down to the Middle East picture that is weighing on stock futures here in the US and Europe. Caution around the latest comments from President Trump that he's in the final stages with Tehran. So you are seeing oil up today. Brent up nearly 1% at $106 a barrel now. The 10-year yield steady at 4.59 and the Bloomberg Dollar Spot Index up a touch. Plenty more coming up. We'll bring you some terminal charts to set you up for your trading day. So stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. 6:55 a.m. nearly here in Europe. Now, I want to dive into these Nvidia earnings last night because such a huge event, moving the Asian market in particular this morning. Particular CEO Jensen Huang's comments that physical AI is going to really open up and is poised to grow in the future. But take a look at where Nvidia has been sitting in relation to its peers and suppliers recently, actually lagging. So Nvidia here is the white line, and then you've got the chip indices in US, Taiwan and Korea all above it, despite all of this excitement. An enviable position still, though, for Nvidia with all of the growth. A beat but not a blowout seems to have been the key takeaway from these earnings. Now flip the board over one more time, and we've seen Nasdaq futures popping on the Iran headlines yesterday. That's the white line here. But take a look at the volatility as well. VIX futures in the blue, never really believing this whole high yields will crush the world narrative, it seems. And flip over one more time. Yes, yields are higher at an absolute level. The 10-year Treasury yield in the white here. But they're staying in range for now, as you can see from the blue line. And that seems to have been enough for today's session when it comes to the equity bulls in Asia. But to access all of these charts, search and save them all, Bloomberg Terminal users can go to CHRT TV Go. All the charts in this show and across the hours on Bloomberg TV. Let's just look at the risk events for today. In just a few moments' time, we'll have the EasyJet earnings. We'll have at 8:15 a.m. onwards global flash PMIs, also that European Commission forecast, and we'll have Walmart earnings, those coming at 12 p.m. London time, a barometer of the US consumer. We have the CEO of recruitment giant Randstad joining Francine Lacroix on the pulse. That a conversation about the AI impact on jobs at 9:30 a.m. But the opening trade is coming up next. Stay with us. This is Bloomberg.